I mean, you can have multiple too. I guess there's no rule about any of this.
There's a lot of rules when it comes to money donuts. No, there isn't a lot of rules when it comes to money donuts, but one thing that there is a lot of rules for could be estate planning.
Oh boy.
Mm-hmm.
And that's why we're welcoming a special guest to this episode of the Money Donuts podcast. With us today, we have Alex from Estate Services.
Welcome.
Thank you. Happy to be here. Excited. This will be fun.
Yeah. So can you tell us a little bit about your role and what you do?
100%. I am a part of the deposit compliance team, which is part of the larger compliance and risk umbrella. One major aspect of that is the estate services piece. So, when one of our members passes away, there are a lot of steps to be taken. That's really where we come in as far as handling legal paperwork. If there are payable on death or beneficiaries set up, making sure we're getting in contact with those beneficiaries for any other identification that we need for them, especially if they're not a member. We would need to get some forms signed from them and then get the accounts paid out to those beneficiaries as quickly as possible and help guide the next of kin through that process.
How did you get into this field?
I started with Royal just shy of 4.5 years ago in member service, taking calls on the phone. And in July of 2021, when one of the deposit operations team members moved up into a coordinator position, there was an opening, and I was looking for something a little bit more in-depth, a little bit more technical. And so I ended up in the deposit operations team at that time. And at the time, deposit operations encompassed, estate services, tax reporting, online accounts origination, kind of a grab bag of anything deposit account related. Then, it's already been over a year now. October of 22 is when there was a restructuring and the compliance team expanded, and we wanted to put more of a focus towards having compliance tasks and having online accounts and digital tasks. And so our team sort of split. I went with the compliance end of things and have been here ever since.
If you could give our audience one thing that you think that they should know about estate planning or estate services, what would that one thing be?
The number one thing I would say is having your beneficiaries planned out ahead of time makes things so much easier, just a world of difference. And with setting up your beneficiaries, that takes a couple of different forms for different people. One thing I would caution is a lot of people think, well, I've got my will put together. My will has everything about who the kids are getting this and who's getting what, which is great as far as the overall plan for your estate. But as far as what Royal's looking for and what financials are looking for, we don't really look at your will. We look at either legal paperwork from the state that's given to us by whoever's the personal representative for your estate planning or whoever's handling your small estate if you're not going through a probate process, or if you have on your accounts already set up with us payable on death beneficiaries, if you've actually taken the time to designate for each of your accounts at Royal who's getting the funds. That's really going to be the fastest way that we can get the money into the hands of the people that you want it to be, is if we set up those beneficiaries right away, then the money goes directly to them. It doesn't count as single-owned assets that are part of your estate for probate. They don't get tied up in the court process or anything like that. It just goes directly to those beneficiaries.
I'm under 40. Is that something that I should be thinking about?
I would say yes. I think that you are better off planning for it than not, because lightning strikes every day. Not to be too macabre about it, but having all of your arrangements in order, and you can always update these things. It's not like you're set in stone. Like, well, we already said that this is going to be your beneficiary. If things change, too bad. At any point, if anything new happens, if you have new kids or grandkids that you want added into the process or anything like that, that can always be done later. But having something set up now is, I would say, always going to be more beneficial for you in the long run.
I mean, as an under 40 person too, you may have a Steve was super proud of it. I'm under 40. I'm thinking from a holistic perspective, if you're a younger person listening to this podcast, you likely have an older person that you care about in your life, and you want to talk to them about this before this happens, right? You want to make sure that they have their ducks in a row and are planning things out. I recently had this conversation with my mom, like, what's going to happen? Do you have your stuff set up, and making sure that we're checking the boxes and asking the right questions and going through it. So
100%. I would strongly encourage, if you do have older people in your life, talk to them, make sure that and it doesn't have to be a cajoling, like, I get all your money, right? It doesn't have to be one of those. It's just the more that you have planned out ahead of time, the less work it's going to be for your family and for your loved ones afterwards. Because I have talked to a number of people who's like, well, she said that we're all getting everything in the will, and it's like, great, but all of their accounts were single here, and we're talking about, tens or hundreds of thousands of dollars. You're going to have to go to the court. You're going to have to go through probate. You're probably going to need to work with a probate attorney to do a full inventory. You're going to need to take the time to have creditors come and say that debts are owed and pay off those debts and open an estate account and then pay things out as the will says, which is a super valid way to do it. But if you can avoid some of those steps or shortcut some of those steps to just get the money into the hands of the people that you want it to, I think that there's a lot of benefit to that and eases that process a lot more. The more steps in legal battle that you have to go through to handle the affairs for someone who's passed in an already emotionally trying time, is just extra work that nobody wants to have to do.
Can we talk about that process a little bit more, just from the royal and like royal accounts and services? Someone who is listening to this podcast might be thinking, oh, great, I want to add beneficiaries. I'm going to prepare to sit in an office for a whole day getting that done. But can you just walk us through what that process is like how you can like customize it? Do all beneficiaries have to be added to all accounts? What does somebody need to bring with them to get them added?
Yeah, great question. As far as different accounts having different beneficiaries, absolutely doable, super common, frankly. If you have, I've got these certificates for my grandkids. This one's for John and Jack and Ashley. You can have John, Jack, and Ashley have 100% of those funds going to them as set up. If you want it to be the same for everyone, we can do it the same for everyone as well. If you're worried about what happens if someone who is your beneficiary passes, we do have contingent beneficiaries that you can set up, which is the most common version of that is I have my kids and then I have my grandkids underneath each of them. So like if my son passes, their two sons will get 50% each of what was going to be going to them. So those contingent setups are also possible. So we do have a lot of customization to it. And as far as how to set that up, what to bring in when you're coming in, we're going to need to know who you're setting up. So if they are a member, great. That makes it easier. They're already in our system, so we can find them. But generally speaking, what you're going to want is their address, a good phone number for them, their date of birth, and their social security number for anyone that you're setting up as a beneficiary, especially a primary beneficiary. If you don't have the contingents, it's not as much of a concern, but really as much of those that you can have for everyone, because what we do is if we don't have them in the system, we will create a record specifically so that they can be listed on the account, and we're going to add all that information on, and especially that contact information, that mailing address, that phone number, to let us get in contact with them, because we're going to do everything we can to track these people down afterwards if we don't have all of their information. And the more that we have to start off with, the less time it takes to get that all resolved. And a lot of times beneficiaries who are not members know that they're beneficiaries. They volunteer to us like, hey, I know I'm on this account. What do I need? So we can get that communication going. But again, just fewer steps and fewer pain points if we have as much of that information to start off with.
I meant to say this earlier. I was going to say someone might be thinking that they're going to prepare to spend a whole day in an office when really it's a pretty quick process. As long as you have all the information that you need, it's pretty quick to get those added.
It really is pretty quick because it's just a matter of basically putting together the form of like who's going to be on it and then signing that one piece of paper. It's saying this is who my beneficiary. If you're customizing it from account to account, it's maybe going to take a little bit more time because you're signing those additional pieces of paper, but it's really just one form to set up a beneficiary. It's not a whole overhaul of your account. It's not like you need to do a whole, it's not nearly as complicated as like making a new IRA for yourself or anything like that even. It's a pretty straightforward process.
Which I think is good because for a topic or a task that's so impactful and important as this one, it really takes the intimidation factor away from it and makes it more doable. And the more doable it is, like, I think that that's great for something so important.
I really do appreciate that we have that customizability because we do see kind of all different types. Like, it's not something that has to be, family only. It's not something that has to be just the direct individuals that you can set up friends, you can set up even like organizations. I know that there are people who set up like nonprofits that they really care about, that they want those funds to go there, and that is something that is available to you as well. There are people who have like a family trust that they want all the money to go into the trust, which they can either put their funds into a trust account, set up the trust while they're still living, or they can just set the trust as the beneficiary. So then we would work with the trustees of that family trust to get the funds paid directly to the trust at that point. So those are options that we have as well.
I feel overwhelmed.
Yeah, trusts can do that. Trusts in general are a trickier piece just because there's more involved. They're complicated legal documents, and I would say are the less common version of how to get things taken care of. But to pare it back and really make it just as straightforward as I can is just, if you know who you want to receive your money, set them as a beneficiary. If you don't know who you want to be your beneficiary, you can leave it as a single account just in your name, but know that whoever is handling your estate afterwards is going to have to go through some steps, especially if it's a larger size to your estate. You may end up going through an actual probate process with a court-appointed representative, and all of those things can follow from there.
I just have to ask this question. What happens if your beneficiaries are different than what the will says?
For Royal, the beneficiary trumps all. If the will says something different than what we have as the beneficiary, that really sort of leaves our realm, unfortunately. All we can go off is we have this form that was signed by our member in our office directly saying this person gets this money. Like, that is our basically gospel truth at that point, that person is going to get those funds. If that's not in accordance with what their wishes were on the will is not a document that works through us at that point.
Did you guys know that?
I didn't know.
This feels like new information.
I did not
to me.
know that, but it does make sense. The will is saying that your assets go to the people that you designate, but you made a different designation for these assets is kind of what I'm thinking of, how I'm thinking of it. So
In your experience, do you run into that a lot, or is it?
I would not say that that's common. I know that there are some disputes that do come up. There are certain designations where people say, like, no, this person shouldn't be getting an equal share. They were written out, that sort of thing. I'm not going to say it doesn't happen, but I would say it's less common than there might be concern about. But to that point about designated funds, that is one thing that I think I certainly tripped me up every once in a while as I was learning the process, is the concept of what assets are in your estate. Like, when we talk about your estate planning, what is that actually? And it's narrower in a lot of ways than I expected it to be when I first started, because really the estate, we're talking about singly owned assets. We're talking about like checking and savings accounts that are just in your name, have no joint owners. If we're talking about like the house is just your name on the property, if you hold those things jointly, if you have a spouse, like all of my accounts at Royal are joint with my wife, and so is our house. And so all of those are not singly owned assets. Like, once I pass, that just moves to her without any sort of gap. There's no like probate process. There's no like forms. The accounts are just hers now. They're in her name only instead in our names together. And the same if something was to happen to her, they would all just pass directly to me. Beneficiaries, similarly, when you have beneficiaries set up on an account or a POD, a payable on death, that makes it no longer a singly owned asset. It is owned by you, but also it's designated to go to those beneficiaries. So it's not part of the estate anymore. So the will covers what happens to your estate, but once you have beneficiaries specifically assigned on an account, it's not part of those singly owned assets anymore.
That's interesting.
you
That's
just,
really
you just
interesting.
got a third the way to your law degree right there. Just kidding.
If that's a third, boy, I gotta get cracking. I gotta write in some credits.
Can we talk about how the beneficiaries on accounts changes how much you are insured up to by NCUA?
Yeah, 100%. NCUA is definitely a hot button issue. Talked to a lot of people from a lot of different backgrounds, especially when FTX was going down and all the crypto stuff was really coming to a head. A lot of, is my money safe in the account? Is my money safe at the credit union? NCUA coverage insures you up to $250,000 for yourself and then for designated other parties. Beneficiaries count as those designated other parties. There are limitations as far as it being direct relations. If you have, your neighbor who's your best friend as your beneficiary, the NCUA and FDIC, I believe, is the same way as far as this goes, but NCUA doesn't consider them a direct relative, so they would not insure you additionally. But if you have like your two kids on your account, those are both going to be individuals insured up to $250,000 as well. So if it's you on all of your accounts by yourself, but you've got those two beneficiaries, those two kids on all of the accounts as well, you're insured up to $750,000. If it's a joint account with your spouse, you're insured up to $1 million at that point. It's basically generations up and down. It's like grandparents, kids, grandkids, and then aunts and uncles, it's like cousins, it's like that like insular family is where those insurance coverages really come into play.
I'm just picturing this NCUA like family tree diagram.
It really is kind of that. And the other important thing is, that's really just if something were to happen to Royal, that's that insurance coverage. If you have more than $1 million in your account, it's not like we're only going to give $250,000 to each of your kids or anything like that. It's still all the money is going to the beneficiaries that you have set up. I would want to talk about, as far as that legal paperwork process, because nebulously saying legal paperwork, I worry that I'm shortchanging as far as what that description really means, because it is less complicated in a lot of ways than that makes it sound. Basically, there's two ways that your funds can go. If we're taking PODs out of it, if we're going to, I just have my assets in my account, and what happens to them after I die, if there are no beneficiaries, there are no joint owners. The big question is, how big is your estate? How big is your collection of singly owned assets? And that counts not just at Royal, across all of your assets. The most common way that this ends up being a large estate is property. If you own your house, that's going to be a big chunk of your assets right there as far as property value. But once you look at your estate in Wisconsin and Minnesota, where we operate, the sizes are different. In Wisconsin, a large estate that's considered probate eligible or probate required is $50,000 total in value. In Minnesota, it's up to $75,000. If you're under that amount, you may not need to actually go through probate. You don't need an actual formal process with the court. There's not going to be a personal representative, and it gets to be a little bit more straightforward. In both of those cases, there's a document that's readily available online with names that sound too similar to each other. In Wisconsin, it's called a transfer by affidavit. In Minnesota, it's an affidavit for collection of personal property. They're two different documents because every state has its own rules, but they mean the same thing. They are a document that you can fill out yourself as I am an heir or an otherwise authorized person, the representative for the will or something like that, who is authorized to claim these assets. So, your kid or your spouse comes in, has that affidavit completed and says, these funds I'm entitled to as the heir to the estate. It is an estate less than that dollar amount, $50,000, $75,000. It needs to be notarized. We offer notary services at all of our branches conveniently. So if you don't have easy access to a notary, we can get that part taken care of. We just can't help you fill it out. You need to have it ready for us. But once you have that filled out, then it would be the same process as a beneficiary at that point. We would be paying the funds directly to you. If it is over that $50,000 and you're going through probate, or if it's over that $75,000, you're going through probate in Minnesota, the most common document that you're going to see in Minnesota is called the letters testamentary. In Wisconsin, it's a domiciliary letter. It's a fun one to say every time. Both of those are going to come from the court. When the judge appoints the personal representative, if you're the one who's handling everything, working with a probate attorney, it's going to be you. Possibly it's joint. I've seen 2 or sometimes even 3 people, like siblings, be listed as co-personal representatives so they can all handle the estate together. But basically, you'll submit the will through the court. They'll take the will as a legal document to consider, and then assign the representative based on the wishes of the will, give you instructions for how to carry out the estate. Creditors can come and make claims on any loans that were out there, any other balances owed or anything like that, as all part of the probate process. But the first thing that really happens is the court determines who the personal representative is, issues that either letters testamentary or domiciliary letter, and that's the thing that we're looking for at Royal. We want that probate document that names the representative, and we're going to need to be paying funds to the estate at that point. When we're paying funds to the estate, that means that we also are going to need to know the tax ID number for your estate, because there's interest earned that gets reported to that estate for any savings accounts or anything like that. If we have interest being earned in the accounts after someone has passed, that needs to get reported to the estate as well. So you'll apply for a tax ID number from the IRS. There's no cost to that or anything. You can go right on irs.gov and get that, what's called an EIN letter, an employment identification number letter, just confirming what that tax ID number is for your estate. And that would be what we're looking for. Again, I've said a whole bunch of stuff and it could get a little lost in the sauce, but basically, if your questions are what happens after they pass and they don't have PODs, first question, how big is the estate? Is it going through probate? It's not going through probate. One of those affidavits that we talked about, personally get the funds, ACE is easy to go. If it's going through probate, if it's a large estate or anything like that, get that court document, get the tax ID number from the IRS, bring those to us. We'll get the funds paid to the estate. You can either open an estate account with us or elsewhere if you have a different relationship at another financial.
I'm guessing people would have really specific questions about their situation. Where should they look for that information, or how to best get your questions answered?
Yeah, 100%. Depending on where you're at with the situation, if it's just about, I want to set up my beneficiaries, I don't know the best way to do that, I would say, getting an appointment to work with a team member at a branch and setting up those accounts, and they can know the ins and outs of what those beneficiary designations look like. If it becomes more nuanced of like, I want to make sure that my will goes and gets paid out exactly this way, so am I better off going through probate and this, that, the other thing, it gets to be a certain point where things leave our realm of expertise, because as much as we know how to handle our process, some of those extraneous questions, you may end up needing to consult with like a probate attorney and do some estate planning with an actual attorney. If it's questions about what's going to happen with my royal accounts, or how do I make sure that my royal accounts end up properly, distributed the way that I want them to, we're happy to help with that on our end. The estate services team, is available as much as we can be to answer those questions. We do work with a lot of family members, a lot of next of kin after someone's passed, when they have particular questions or when they need to do some management pieces. So we are that available resource as well, as far as internally, as far as what Royal's concerning with. But if it gets to be too many like complex and nuanced pieces, at that point, we might recommend legal counsel just to get that all sorted.
So when we talk about the term estate services, does it only deal with assets like money markets, certificates, savings, everything, or does it deal with debts as well? So if a member has a mortgage or a car loan, do you guys deal with that too?
Yes and no,
Okay.
is the unfortunate question. With loans and with mortgages especially, because those do end up just being outside of our expertise, we do end up working with mortgage servicing, with like loss mitigation and collections on those pieces as well. Consumer loans, as far as like vehicles and personal lines of credit, credit cards, those are a little bit simpler. Mortgages are their own thing, where there's a lot of pieces of just like how closing documents and how refinancing works that we just aren't versed in on the estate services end of things, because we are deposit focused. But with consumer loans, really the most that we touch on them is, people can get payment protection on their loans, which I have on my loans because
I do too. Yeah.
I consider it worth that premium every month in case something happens. But we will, once we have the death certificate, we work with TrueStage, our insurance partner, to file those payment protection claims and get those balances paid on those loans. Same is true for non-collateral loans like credit cards and personal lines of credit, signature loans, those sorts of things. As far as the vehicle loan, once the balance is paid, and once it's settled, then we can also release the lien. The most common ways that people handle those, because there's collateral involved, are either refinancing it or buying it outright themselves, selling it, whether that's privately or to a dealership. And then if those options aren't available, then it's a conversation with loss mitigation about potentially doing something like a voluntary surrender of the vehicle and us repossessing it and selling it at auction to try to pay off that balance. All those are options. Once they're considering that point, that is where we get them working with loss mitigation, because really a lot of those decisions do stem from that team. The mortgages, it's similar, where it's going to need to pass to somebody else, and we touch on them very little. And I would hesitate to say anything concrete about it, just because we aren't as versed in that process. But the main thing in either case that estate services tends to get into the center of is, if you are going through probate, that part that I was saying about creditors making claims on loan balances, we do that as well. And it's not necessarily us saying this has to be paid. It's not Royal like guaranteeing payment for themselves before anyone gets any like funds out of the estate account or anything like that. It's really just us throwing our hat in the ring, so to speak, and notifying the court, like, hey, we see you've got this probate process going on. So this person had this car loan or this vehicle loan or this credit card with this balance. It is owed to Royal, and then it's to the court to decide, are there enough liquid assets to pay that balance? Collateral loans, things that like vehicles and mortgages take precedent over things like a credit card or a line of credit that has no collateral, and all of that inventory gets done by the probate court. But that's really where estate services gets involved, is in the filing of those claims, the releasing of those claims once the balances are paid and that sort of thing. And then in the payment protection and insurance on True Stage's end.
All right, this is a little off topic, but can you guys want to walk me through payment protection?
Yeah.
Can anybody do that?
I can do it very lightly.
Right.
I've never been a loan closer, so
I can fill in the gaps
would love
from my
that.
office days.
Perfect. Thank you. Payment protection comes in three main flavors. There's death and disability, and then death, disability, and employment, protecting you from those things listed in that description. If you suffer some sort of like hospitalization or disability that prevents you from being able to work, prevents you being able to pay your loan, if you have that disability protection, you can file a claim with True Stage, through our team, through our loan team, to basically make your payments and get them covered until you can return to work, until you have that income to start making your loan payments again. The big one that estate services touches is just that death piece, which is kind of on all of those payment protection options, and then you can basically pay a higher premium to have more and more covered for those situations that are more common than passing away. But when someone passes away, we'll go into that payment protection claim of saying, hey, this person passed, this was the balance on their loan at the time that they passed, and then True Stage will work on their end. Sometimes there are, it's an insurance claim. There are pieces to it. Sometimes there are like pre-existing medical conditions or an age that a member was when they took out a loan or got new credit taken out that precludes it from being paid in full. But ideally, always it's going to be paid at 100% of that balance. And basically, once someone passes, we pay that loan off, and then it's just done. The family, the estate, no one has to worry about it.
This is a good time for our audience. If you want to hear a full episode on payment protection, please comment and let us know. And that's something that we could maybe put together.
I would love to have one of those.
But was there any gaps? Anything you
No,
want to add,
that was a
Alexis?
really good summary.
Yeah.
I will say, yes, 3 flavors, 2 of which, the disability and unemployment, those do have like work hour requirements. I believe you have to work at least 25 hours a week to qualify for those. But that loss of life one, that death one, there are no like work requirements. You can get it. The really nice thing about that, any of the payment protection options, is that it gets baked into your monthly payment. So it's not like you're having to submit a second payment to cover that premium. It's baked in on top of it. And it's also based off principal amount of your loan. So if you get a car loan, as you make payments month after month after month and your principal balance goes down, the less amount of your monthly payment is going to go towards that principal or that payment protection. Just because your principal is getting lower, you're paying less to have it, but you're still getting the same great benefits as when you originally took out the loan. Mm-hmm.
Peace of mind, yeah.
Yeah.
100%. If I remember right from the days of taking out my own loans and looking at my own contracts, I believe it's baked right into like that amortization of your payment, where it says like, this is how much is going on to just the whole balance of your loan, and this is still just your flat payment. It's not like your payment's going to change over time. Or
Exactly.
anything. It's just there.
Yep.
All right, back to estate services. Anything else?
One thing I do want to talk about that I would say is probably the most common thing that our frontline team runs into outside of what we've already covered is, all right, someone's passed away. I'm handling their affairs. Royal's my credit union. That's where I do all of my financing. That's where they did all their financing. But we got a return on their insurance premiums. Geico sent us a check for $200 payable to the deceased person, or we got a check payable to their estate from like the utilities company or something like that. And it's either payable to the person who's passed or payable to their estate. What do I do with this check? Can I put this into my account? Very common question. And the answer is yes, but with steps. When something is payable to an estate of a deceased member, ideally it would go into an estate account. If you're already in the probate process, you still have that estate account open, put it right into that estate account. Same if it's payable to that deceased member. If John Doe has passed, either a check payable to John Doe or a check payable to the estate of John Doe goes right into John Doe's estate account. Easy enough, and then you're good to go. If it's payable to just John and John still has accounts with us, like you haven't finished the settling of the accounts at Royal, we can make that deposit into John's account, and then as we're collecting paperwork to settle that account down the road, whether it's your affidavit or your domiciliary letter to pay things out, that check's just already deposited. It's one less thing in your hair. But if it's payable to that estate, and it was a small estate. It's under that $50,000. It's under that $75,000. What do I do with this? That transfer affidavit and that affidavit for collection of personal property extends to more than just accounts at financials. That is something that you would use to claim that check as property. And so what you would want to do is you take that estate check and your affidavit and go back to GEICO and say, like, hey, I need this rewritten to my name. I'm the heir. Here's my affidavit. And we can, again, get that notarized for you, but then get that check claimed and then go through those steps with whoever issued that check. That's going to be the way that you go about getting those funds reissued to you, because we can't just have you sign it over and put it into your own account. It does need to be going into that account for the person that it's payable to.
I can see where that would be tricky
Yeah.
to comprehend.
Yeah, that one's a fun one.
Yep.
A lot of great information today in this episode. I really appreciate you taking the time to do it.
Yeah, I was happy to come out. I feel like I talked a million miles an hour, and I'm pretty sure I've said everything I came here planning to say. But
The question I was going to ask right away was, who has their beneficiary set up?
Nope.
Nope.
I mean, I have a joint account holder at least, so like my wife. But
yeah.
it's, I don't know.
That's true.
The odds of something happening to both of us are probably greater than they aren't, or something. I don't know.
And something I'll say with that is, just because you have a joint account doesn't mean you can't have beneficiaries. You and your wife just both have to sign that document. So you guys can set up your kids as PODs or your family, whatever, however you want to do it. You would just both need to sign off on any changes to the account because you're both owners. But then if something were to happen to both of you, you're good to go. If something happens to one of you, you're still good to go. There's no new paperwork to sign afterwards. When it becomes a single account, you still have that set up.
See, we're taking this stuff home.
I guess so.
Can you do it online, or is it best to do it in the office?
It's going to be something that you do in the office unless you're opening up new accounts. We do have that online account origination through our website, through our online banking. It does ask you when you're setting up that new account, whether you're becoming a member for the first time or if you're doing additional accounts through your online banking, it does ask you about setting up beneficiaries, at which point you can mark that. And then when you electronically sign for your new accounts agreement and everything like that, the POD form is just included in those documents that the digital accounts team will send to you.
That adds another question to me. If I did that, I don't remember if I set up beneficiaries. Is there any easy way for me to check that?
Honestly, that's something member service can help you with. That's a phone call to member service. That's checking in an office. It's something we list those roles on the account internally. We can see, this person is the owner, this person is a beneficiary. In one case I saw recently, 17 people are beneficiaries. Every single grandkid was listed on one account. We can see all of those roles on the accounts. Any service team member can help with that. So that's a phone call like, hey, I want to make sure I got my PODs all set up. I don't. Great. Can you get me into an office to sign those forms and get that changed? That can all be a conversation over the phone.
That'll wrap it up for us today. If you like to listen or watch Money Donuts, just make sure that you hit that notification and subscribe to our channels. We have a new Money Donuts Instagram channel that we've been posting on. Right?
Yeah.
Yeah.
At Money Donuts.
At Money Donuts. So that's exciting. So follow us there, and I'm just going to give my... I'm the only one who's doing this, and they're not doing this.
To be fair, I wasn't shown choreography before I sat down.